So today let's start with maybe GU, EU, and if you guys trade cryptocurrency, I can also analyze maybe Bitcoin for you and any other pair you guys want to. Is that okay? All right, guys. So first, I don't know if anybody can hear me. Let me check the chat box. Okay, yes, I can hear you. Okay, perfect. All right, let me continue then. All right, so today we'll be looking at GU, EU, maybe one of cryptocurrency, that's Bitcoin, and anyone you guys want to. So any pair you want me to analyze for you guys should just help me put it in the chat box. So let me not waste your time and make this live session too bulky, so we can all go back to what we want to do. So today I'll, let me see, okay? Let me take this here. So today we'll be looking at GU firstly. And before we start the whole thing, I would like us to understand something about the market, which is, okay, analyze gold. Okay, that's fine. I will analyze gold, no problem. No problem. So before we look into this market or the analysis today, I want us to understand something, which is market structure, right? To know the direction of the market. That's just what it's all about. Market structure. This is, we have different types of market structures. We have the uptrend, we have the downtrend, and we have the ranging markets, right? So firstly, before you analyze any market or start calling out signals or taking any trades, it is important you know the direction of the market. If it's going in an uptrend or a sideways trend and all these things, this is going to be a little bit fast and choppy. So let's take this to be an uptrend. Probably plot your trend line, an uptrend, and this would be, okay, this would be our downtrend. So before we go into the GU, I want us to understand that where is the where is the market going to? What's the direction of the market? So now we'll go from the weekly. I like to analyze from the pairing time frame to the internal. So we'll go from the weekly. This was from last week, how I've been holding this trade. Can you hear me? Okay. Crypto, I've seen your request. That's fine. So as we can see, for like few weeks, this is 1, 2, 3. This is the 4th week since on the. Someone's mic is interjecting. Please, I might have to mute, so I won't get it. Okay. So, okay, back to what I was saying. For like 3 weeks in a row, we've been having a bearish move. That's on the 17th of July till today. We can't really say where we see the market would go or where we expect the market to go. We can only predict it. So I would say from the weekly, which I plotted here, let me scale it down. I like scaling running my analysis from the weekly to the daily to the 4 hours, then the lower time frame, that's the 15 minutes or 5 minutes for execution. So now this is we can see it clearly, the direction of the market, which is the market structure. We can see that the market is giving us lower high, lower low, lower high, lower low. So what do we expect here? Now, the market has created an equal here, or is about creating an equal here. So we're expecting the market to take out this weekly low. So we expect something like this. Then it goes back up before creating another one, right? So now what do we do in this case? Let me shift this thing one side, okay? This is basically what the market is doing. So what do we expect in this place? Personally, I want to see the market rally up a little bit. Reason because for like the whole of last week, 1, 2, 3, 4, 5, the market has been bearish. So I expect liquidity to be taken from the upside first before it goes down, before it sweeps out the downside liquidity. Let's scale it down a little bit. Okay, this was for last week. I don't think I sent out this trade. I took it personally, I guess. So most likely I want to see markets either mitigate this point, either it takes out this downward liquidity, or it mitigates with this daily low and this daily high you can see here. Can you guys see me? Can you guys see it? If you can see it, please just indicate in the comment and in the chat box, so I'll be sure I'm carrying everyone along. If you're following, let me be sure I'm carrying everyone along, please. While I'm waiting for the response. So personally, I'm expecting markets to liquidate to mitigate this daily high we see here. So most likely would sweep out the liquidity like this to go up. Or overall, I would say we are bearish on GU. Overall, I would say we're bearish on GU. We're still bearish on GU. If we plot out our trend line, let's take the trend line. We can see that, okay, tendencies of the market rallying up to this point, like I said, to mitigate this daily high, sweeping out this liquidity. Because if you look on this place, you look at this area, these zones, you can see something like an equal here. So people are already selling at this point, and the market, wherever there's liquidity, is where the market tends to tap into first before it continues its move. So I can see a lot of liquidity lying on these zones, on these areas, this point, this point, this point, this point, since everybody already knows that the market is bearish. So at this point, the market is just going to induce people into selling quick. So I want to see something like this. Probably go back up, come here, go back up. On the internal structure, is going to break structure. Rather, on the internal, I expect markets to break structure before it gives us this pullback. Now, reason is because the market is now going to create a trend line liquidity. We have different types of liquidity, and that's why I actually teach people, my mentees, I just tell them the types of liquidity we have and all. So the market I expect the market to create trend line liquidity at this point. So probably this week we might just see little bullish movement like from now to probably Wednesday before we see a sell-off to create liquidity, trend line liquidity. To create trend line liquidity and we sell off. So I don't want to dwell too much on this GU. Probably we'll go into, do you guys have questions though? Are you understanding me? Okay, perfect. All right. So I'll go to EU right now. like we did on the previous EU and GU, they are at some point, to some extent, I would say they are correlating. But now, to have what move EU is going to take, the DXY is the inverse of EU. If EU is selling, DXY would be buying. It's the inverse. It's just like flipping your trading view over. Whatever EU is doing is the inverse of what DXY will be doing. So that just have that at the back of your mind. So now EU, as we can see, GU was bearish. Obviously, EU would be bearish in most cases. So we'll go back from the weekly. We'll go back from the weekly. You can see this inducement. These are inducements, which is trapping in quick sellers, people that were selling at this point. At some point, it just took them out, right? So now as we've gone on the weekly to see the direction of the market, because the higher time frame will show you clearer pictures of the direction where the market is heading to. We can see, okay, let's just plot out, let's say, our trend line to be. Obviously, it's still a bearish movement. Higher low, lower high, lower low, equal, premium, lower low, equal, lower low. So we're expecting a lower high, then another lower low. This could be a lower high, but let's see how it goes. Now on the weekly, we're now sure that it's bearish. To see it clearly also, or clearer, let's just scale it up or scale it down to the daily time frame. Now on the daily, we can see that the market on these areas, the market has just been, it was ranging from this point at some point. It was ranging before it broke out to this point. So now what do we do in this? Let's see if we can have a trade on this pair. If it's something I'm going to send out, or I'll just have to chill. I don't like to rush into the market. I just like to take my time. Yes, my principle is less is few. Reason is I don't call much trades, but whenever I call trades, out of 10 trades I'll call, I can say I'll be right 80% of the times, or out of those 10 trades I'll call, I would actually have 8 winning trades. So I don't like to rush my trades. I like to take my time and execute. So now we can see that on the daily, market is about to take out this weekly low, right? The market is about to take out this weekly low. So now we'll still scale it to see it clearly. Now we can see that the market has already created around these zones. Now, wherever you see liquidity is where the market tends to tap into first. Reason is liquidity moves this market. Liquidity moves the market. So wherever there's liquidity, the market tends to go there first. So on this point, where we've seen an equal, which means people are already selling. They're already putting their stop loss above this previous high. So the market might come back to this zone to sweep out. And if you also look on this part, you will see more like an imbalance that needs to be filled up on this side, right? So now what do we do? Most likely, this is going to be a very risky trade. Now we can see an order block here. I like to take an order block from the body, not the wick. This trade is very risky because we have liquidity on the upside and on the downside. And also, this order block is not my main order block that I like using, because this is a very weak order block that market can, with just one small push, we're out of the market. But now, if I'm to say let's scalp it, we've spotted this order block. I like to scale it down to probably the 15 minutes. Okay, I like to scale it down to this point. So if we were to scalp it, not using big stop loss, I don't like using big stop loss. So I'll have better risk to reward. So mind you, overall, we can see that the market is bearish. So if we're buying at this point, we are counter trading the trend. We are trading the opposite of the market direction, which is very risky. I wouldn't advise anyone to do it. But if we're to scalp, because the market always gives us opportunity to either buy and to sell. Just know when you're jumping into the market. Right? So if we're to scalp this trade, put your stop loss below, slightly below this whole place. This is about 15 minutes, 15 pips stop loss, which is very big. If you ask me for scalping, it is very big. But then to target about, I like targeting 1:5 TP or more. So since I'm expecting the market to sweep out this liquidity, let's not get too greedy at this point. This is 1:7. If the market should tap into this place, take partials or take partials at 1:3, 1:2. I like 1:2, so I would have to I just want to make something times 2 of my stop loss. So if we're to take this trade at this point, I don't really like trading on Mondays because the market is not yet settled. You will see a lot of spikes up, spikes down, just to create sweep out liquidity. So I personally don't like trading on Mondays unless I see very good opportunity that I would like to take advantage of. That was the reason why I sent out trade last week Monday. So if we're to scalp this trade, we'll go for a buy. But overall, our market is bearish. We should be looking out for more of sales than the buys. But this is just more like a scalp. Reason because my confluence, number one, I am seeing an order block. One, I'm seeing the market, this imbalance that has to be filled. Two, and I'm also seeing just a little, I'm expecting the third touch on this trend line. Three, then we can go into I'm coming, sorry. What's it? Okay. I'm saying we can now scale it up to, let's say, psychological numbers. You get. So confluence number one, psychological numbers, trend line, third touch of the trend line. Two, order block. Three, imbalance. You get. To take this trade for a scalp. But overall, the market is bearish. Let me go back. Do you guys have questions as regards to this, or should we go to gold and other things? Should we go into gold, or do you guys have questions regarding to any of all these things I've just been explaining? So I'll know where to just throw more light on. Let me see. You can send your messages to the chat box. So I'll read them. Okay, while we're waiting, I'll jump into gold. So XAUSD. Okay. Okay. Okay, I'll look at GBPUSD. But I've actually touched on it, but I'll go back to it maybe before we end this live session, let me just quickly rush into gold analysis. Then I'll get a recap on gold on GU analysis. But then I'm recording this this live session, so I would post it out there for people that missed it or could not join. So everybody will just have an insight of what it's like. I'm going to post the video, so everybody will just participate and know what's up. So XAUSD. Now I posted the buy for this last week. And at this, I posted the buy at this point. We're still in this schematic box. So I posted the buy at this area, these zones, when it was a quick scalp because I expected the market to okay. I just saw a message right now. The best time to scalp. Sincerely, I don't scalp. I don't like to scalp. I'm not really a scalper, but I'll tell you sincerely, the market gives opportunity to people that are available. So I won't say there's a particular time frame to scalp, but it's best 5 minutes time frame, the lower time frame. 5 minutes time frame is good. 3 minutes time frame. Most times I execute my trades on 3 minutes time frame. Most times I execute my trades on a 1 minute time frame. So scalpers, it's important is best to scalp from lower time frame because that's when you see a lot of movement. After you've done your analysis from the pairing time frame, which is the 4 hours, the daily, the weekly, then you scale it down to 5 minutes time frame, 3 minutes time frame, and 1 minute. Some people also, I know a few people that scalp on seconds, like they just scalp on these seconds where we see you scalp from, some people, I've seen somebody that scalps from 10 seconds, but I don't do it. I don't scalp. So, but it's best advice or suggested. I suggest you scalp from 5 minutes time frame, 3 minutes time frame, and 1 minute time frame for scalping. I don't know if that was helpful though. Okay, back to what I was saying. Now, XAU gold. Okay, perfect. All right, you can still. You're welcome. So, last week, I was expecting the market to push up to this point. I've not even cleared my charts. You can see this place where I said I'm expecting the market to rally up to. The reason is because, one, the market has already given us liquidity on this zone. And like I said, or I'll keep saying, wherever there's liquidity is where I expect the market to tap into first. So what you need to do is train your eyes to spot out liquidity. Because if you want to trade like these people, you need to see things the way they see it. Where is liquidity resting? So I've been seeing a lot of people selling at this point. And trust me, the market has just been selling. At this point, trend line touch, going down. There was an accumulation here. You can see it. It ranged. Finally came down to this point. Range. So at this point, I was expecting the market to go and fill up the orders on this point and just sweep out liquidity on this zone. So that was why I said, okay, let us buy. I expected it to buy. Then when I noticed the market was about to go down, was about to make this move, that was when I said, I am out of the market. I jumped out of the market when I posted it on the channel. I was like, let's jump out of this market. I'm out. It was because I noticed the market was changing and we had NFP and other news incoming. So I just wanted to be on the safe side because I trade prop firm accounts. I have my personal accounts and I have lots of prop firm accounts I was handling. And during news, all these prop firms, they don't respect stop loss most times. So they just, if there should be a spike, you will be out of the market, irrespective of the fact that you had to put your stop loss. Most times our stop loss don't hold. You get, so that was why I had to close on this trade because I expected this move to happen before he buys. So why did I take a buy? Just like the gold and the GU, I said, the EU, I just said, if we were to scalp, a buy. Now, first touch on the trend line. I'm coming. Let me just replay it. So I'm coming. Okay. So at this point, I guess it was at this point I spotted this order block. I don't know if you can see it. This was why I took the buy. I was expecting a second touch of the trend line. Now I already knew that taking this trade at this point is very risky because markets would want to, we're bearish overall. So I was obviously counter trading the trend. So I just had to take the risk with less risk, which is if I was supposed to use 1% on any of my accounts, I'll just take half of the risk. That's 0.5% of the risk I'm supposed to take on a normal. So I saw that the market had already given us an order block. As you can see, I spotted it here. I said, okay. For gold, I like to use, most times, depending on how the liquidity is, I like to use 50% of this. There's what we call the GAM box. I like to use the 50% of, there's what we call the GAM box. So this was how I took that trade last week. I like to either use the 50% or this. For me not to miss out on the trade, I just use the top of the order block, the T, right? So, sorry, can you help us mute? So let me just quickly finish this whole thing. I had to just, as I spotted this order block, I was expecting it to come and mitigate the order block. One, I use more of pending orders just because of my activities. I might not be available the time market would be doing this thing. So I expected the trend line touch, one, order block, two, psychological numbers, right? Three, and since it's a scalp. So this was what I was anticipating. Quick one. Now the market has tapped into it and it gave us that move. I don't know if you can see it. The market tapped into it and started giving us that move. Now at this point, since it's a scalp and I'm counter trading the trend, I already had to, I had to put my stop loss already because it's a scalp. I don't want to lose money on this trade because now at this point, I said, okay, now this should be giving us 1:2 already. So that's why I had to move. Now at 1:1, I like to move my stop loss to break even. If it hits my break even, fine, I'm done. But at 1:1, stop loss at break even. So at this point, it was already giving us 1:2. And I was thinking of taking partials already. I already took partials that I took a screenshot and sent out. 1:2, I took my partial and I already had my stop loss at break even, just in case. Now you saw what happened. It came back to this entry and took us out. But I was already safe because I already took some profits. Now, this was prior to the news that came out, NFP and the news we had that day. I've forgotten, but I only remember NFP. Now I already knew that since we've already taken partials at this point, the market will still want to rally up a little bit, right? The market will want to still rally up a little bit. So at this point, I was looking to enter at this point again and just rush up. I was looking to actually enter at this point then for the spike. But then why I didn't enter was because NFP came out at this point, you get. So that's why I didn't really jump in on the trade again. Because since I was expecting NFP, I now knew that, okay, the first move of the market during NFP is a fake out. If the market is bearish and you see NFP the news comes out and you see, if the news comes out and you see a spike like this first, that first spike is always a fake out. 90% of the times you see a fake out like that is always a fake out. That's not the actual move. So when I saw this move, I knew that, oh, okay, this is a fake out. But it was too late for me to jump on it, and I couldn't call this trade out because it is too risky. I wouldn't want anybody to come and blow their account. You get? So that was how I took this trade. Now for gold, back to this gold thing. I expect, since we're bearish, I still expect markets to come back up a little bit, then continue selling. Or gold might just decide to, because gold can send people to their village. Let's be honest. Gold can send people back to their village. So gold might want to fill up this imbalance here, might want to fill it up before it goes back up, then sell. Right? So quick one before I end this. I'm already having my mentees message me. But okay, quick one. Let's go to OP. Somebody mentioned crypto. OPUSD, yeah? USDT, okay. OPUSDT. Okay, psychological numbers are basically, I just saw a question here. Psychological numbers are basically round numbers. Round numbers, you get. Probably I would either make a video on psychological numbers. So let me quickly go to OPUSDT. OPUSDT. All right. So we go back. This is my strategy actually works for. I'm not keen on what strategy works. No, strategy is based on the individual or what works for you. You get. So my strategy basically, it works for me on both synthetic pairs, Forex and crypto. So, but I'm not actually here to start telling you what pattern works or what I'm coming. Okay, this is OPUSDT. Now, if you can see on the weekly, we can see that overall it's been bullish. I made a video on BTC, what I expect the market to do, and from that time till now, the market has actually been doing it. I posted the link to that particular video in the I posted it on the channel. So I'll probably I'll go and comment on it so we'll see it. So all right, I'll check GU. I'll go back to GU, or I'll post this video so you would see, because I already made a video on GU. So I'll post this video back. So maybe you guys that came in late would go and watch it back. How about that? Can that work? So I don't waste much time. Okay. OP has been bullish, crypto has been bullish for a moment, and that's because I expect liquidity to be taken out on some particular zones, but I want to focus on this OP for time's sake. So on the weekly, we can see that market has just been, it created a weekly low and is about to take out, okay, it has already taken out the weekly high, right? Let's take it down to 4 or to the daily. Now I expected the market to come down here, but it didn't. It didn't. So what do I do at this point? I always wait. I'm that patient. I'll wait. If I will make the best out of a market, I have that time to wait. I mean, I'm not here to compete with anybody. I'm not here to rush myself into any of all this. I'm just here to make profit. So this was what I expected the markets to do. Come back down here. Come back down here. These are not my major confluence to taking trades, but these are just the ones that I can spot out easily without stress. There's no need to start saying ball and German, this and that. No, whatever works for you, stick to it. Strategy, a lot of people just deceive us with the whole strategy thing. If you're not using my strategy, you're not a good trader. Nothing, all those things. Yes, fine, it plays a good role, but what works is, are you profitable? So back to what I was saying, I expected the market to give me a third touch on this trend line. Now I don't trade. Trend line touch is not my major confluence in taking a trade, but it is part of it, but not my major. It is just part of it, just to add it to it, just add some muffins to the cake. So I expected markets to come back here, tap into this place and start buying. All right. So let's scale it down to 15 minutes. So I just don't want to waste much time. I might have to send the trade on this OP since we have crypto traders. So I expected the market, since he gave us this little break of structure, this red line you see here is liquidity. So I was expecting markets to actually come and sweep out the liquidity. Since this happened already, since this happened, we can see that, okay, I said the market was, at this point, the market was here. The market was here. So I expected the market to rally up, take out this liquidity to create this for me, then come back down. You can see what I said here. I said I expect price to take out the equal high. This is the equal high at this point. I expect price to take out the equal high at this point with an inducement. Now the inducement is the quick sellers, take them out and start selling. You get. So after giving us 1:19 on this OP, because I took this trade. After I sent out this trade, I took it. So I just had to place a pending order. And I guess I was driving when this thing happened, and I came back and I saw I was in profit. I already had to take some profit and just chill, allow it right to the top. So I expected this move to create all these things. Now chart patterns can work, which is the M formation and all W formation and all those formations. Those things also are my confluence, but they're not my holy grail when taking trades. I use them most times. So when the market did this thing, I was like, okay, the market is already doing what I expect. So at this point, I was expecting now to re-enter at this point, but now the market left me.